Some peaks have formed in the various markets that we have been tracking in these market updates, and in today's market update we're going to be taking a look at those peaks and considering what is happening in the analysis. We will start, as we usually do, with the S&P 500. This is SPX data, and you will know that the analysis we have been tracking has an 18-month cycle trough over here in October of last year. There is a question mark surrounding the magnitude of this trough that formed in the middle of April. You can see that in this analysis it is phased as a 20-week cycle trough. However, here is the circle and whiskers for the 40-week cycle, indicating that it is possible that this trough, instead of being a late 20-week cycle, could have been an early 40-week cycle trough. Regardless of the magnitude of that trough in April, we know that we have been expecting an 80-day cycle trough to form in the markets. And in last week's market update, I presented the possibility that that 80-day cycle trough had already formed, or that it might lie ahead of us. So let's zoom in and see what happened. In our previous market update, I pointed out that this is a potential position for the 80-day cycle trough, with the 80-day cycle circle positioned directly below that low at the beginning of July. I pointed out that we needed to watch the 20-day cycle FLD, because if that FLD provided support, that would confirm the placement of that 80-day cycle trough at the beginning of July. If, however, price crossed down below the 20-day cycle FLD, that would imply that price is still moving down into the 80-day cycle trough, the nest of lows for which is below price action at the moment. As you can see, on Friday of last week, price did cross down below that 20-day FLD, making it likely that the 80-day cycle trough still lies ahead of us. However, as you can see, time is running out for this 80-day cycle trough to form. Here is the nest of lows, and we are now well past the midpoint of that nest of lows, and so that 80-day cycle trough needs to form soon. The target generated by price crossing down below this 20-day cycle FLD is a little above 5,400, and so that would be a suitable position for the 80-day cycle trough to form. However, if price fails to reach down there, that would yet again confirm the bullishness that is evident in this market, and so we are not holding our breath in the expectation that that target will be achieved. Is it still possible that the 80-day cycle trough did in fact form over here? Yes, it is, and let's quickly take a look at that analysis. Here you can see the 80-day cycle trough has been phased at the beginning of July beneath this price action over here, but here is the critical moment where price didn't find support at the level of the 20-day FLD, but has dropped below it. It didn't drop very far below it, and as I've mentioned, it has not yet reached its target at just above 5,400. Here, according to this analysis, is where we are expecting the 20-day cycle trough to form. This analysis is still viable, but in my opinion the other analysis is the better one, because this is a fairly unlikely shape for the first 20-day cycle following this 80-day cycle trough if it did occur at the beginning of July. If we display the composite model line, this is a useful tool which combines all of the information found in the cycle analysis on the chart. It combines that information and presents in the past the result of that combined information from the cycle analysis. It then projects it into the future. You will see that the composite model line leads us to expect a bit of a bounce out of this 20-day cycle trough, but then the market is expected to turn down again as price heads into the next 20-week cycle trough. Of course, if this is the 80-day cycle trough that is forming now, we would expect more bullishness as price bounces out of this 80-day cycle trough. And that is currently my preferred analysis, which we will see when we take a look at the Nasdaq. In recent market updates about the Nasdaq, I have introduced the slightly unusual possibility that this trough that formed in the middle of April was in fact perhaps of 18-month magnitude. This seems a little less likely now, particularly given last week's price action. I mentioned in the previous market update video that if this 18-month trough did occur in the middle of April, we would expect the 80-day cycle FLD to provide support. You will notice noticed that on Thursday and Friday, price dropped down below the 80-day cycle FLD, indicating that the FLD is not really providing support, although of course we should really be looking at this 80-day FLD on a weekly chart. There is that weekly chart, and you can see that price has only just slipped below the FLD, and so it is still possible that the FLD is going to provide support. This week is going to be critical to resolve this particular analysis possibility. You can see that this analysis has become very messy at the foot of the chart. That does not mean it is completely invalid, but it is an indication that the cycles are not really behaving as would be expected according to this analysis. And so we will revert back to the previous analysis, which considers the trough in the middle of April as a trough of only 20-week magnitude. Here is that analysis. There is our 20-week cycle trough in the middle of April. Here is our very neat nest of lows for the 80-day cycle trough. And here you can see that price crossed down below the 20-day FLD on Wednesday of last week. In doing so, it generated a target as a matter of interest at 19,500. And as you can see, that target was very accurately reached on Friday. That doesn't necessarily mean that that is the end of the downward move, but when a target is achieved, it certainly gives us reason to expect that the cycle move is complete. And as we are expecting our 80-day cycle trough over here, with the nest of lows directly below price last week, we are looking for price now to bounce out of the 80-day cycle trough. You can see how this analysis is much clearer than the analysis we're looking at in the S&P 500, and this increases my confidence in the fact that the 80-day cycle trough is forming now, not only in the Nasdaq, but probably also in the S&P 500. Our expectation here is very neatly presented by the composite model line. Let me just clear these markings and hide the FLD. You can see that the composite model line is matching price action in the past fairly closely. That is again an indication of a good quality analysis. You can see that the composite model line tells us that according to this analysis, we are of course expecting price to bounce out of an 80-day cycle trough, dip down into a 20-day trough, and then climb again, and then down into a 40-day cycle trough over here in the beginning of September or the end of August. And so in the Nasdaq, we are watching for price bouncing out of the 80-day cycle trough. We've been watching the Australian stock market recently. This is the ASX, and here we have the same 18-month cycle trough at the end of October last year. Here again we have a 20-week cycle trough in the middle of April. There is also this floating circle and whiskers for the 40-week cycle trough, indicating again that there is some debate to be had about the magnitude of the trough in the middle of April. It is either a late 20-week cycle trough or an early 40-week cycle trough. Regardless of the magnitude of that trough, we are again expecting an 80-day cycle trough to form in the ASX. And last week I pointed out these two 40-day VTLs, which were defining this triangular formation that occurred in price. Let's zoom in and see what happened. As I pointed out in the previous market update video, if price succeeded in crossing above this 40-day VTL, which it did almost 2 weeks ago on Thursday, that would confirm that an 80-day cycle trough had formed in the market. That is one of the rules that Hurst defined when he defined his valid trend lines or VTLs. And so by crossing above the 40-day VTL, we have confirmation that an 80-day cycle trough has formed in this market, and this is probably the position of that 80-day cycle trough, which I discussed in a previous market update video. You will notice that the analysis that the software is performing has still not confirmed that 80-day cycle trough as having formed. The reason for that, even though the software does follow Hurst's rules, is because a VTL is not as reliable an indicator as some of the other indicators that we work with. That is because a VTL is very closely based upon the analysis that has been performed, and a VTL therefore can lead to a self-fulfilling prophecy, if you like, and so you need need to be a little bit careful about applying these rules with regards to the VTL. And so the software has not yet confirmed that this 80-day cycle trough has formed. And given the fact that we are still expecting that cycle trough in the Nasdaq and the S&P 500, it is certainly possible that the 80-day cycle trough lies ahead of us. However, I would be inclined to believe that the 80-day cycle trough has formed, in which case we need to focus on what is going to happen next. And in order to do that, we're going to look at our 20-day cycle FLD. If an 80-day cycle trough did form over here, then we would expect price to find support at the level of this 20-day cycle FLD at about the time that the 20-day cycle trough forms. If we measure the number of bars that have elapsed from this price low over here, which is the likely position of the 80-day cycle trough, in my opinion, we would have expected a 20-day cycle trough at about 17 days. So that was pretty much over the weekend that has just passed. Price is still above the 20-day cycle FLD, and so it is not too late for price to find support at the level of that FLD. But if price crosses strongly below that FLD, again, we are going to have to question the potential position of this 80-day cycle trough. In gold, we have a similar situation where the software is not yet confirming this 20-week cycle trough that we have been discussing in recent market update videos. It seems likely, as discussed in the previous market update video, that this 20-week cycle trough did come in over here at the end of June. But again, the software has not yet confirmed it. Remember that we do not wait for confirmation of a trough before actually trading a move out of that trough, which is a very important rule of thumb when it comes to working with Hurst cycles. You do not wait for the confirmation or for the diamonds to form. The nests of lows provide us with the expectation of a turning point or a trough or a peak in the markets, and we make our trading decisions on the basis of that expectation without waiting for the confirmation. You will notice that as of today, and I am recording this video as I usually do before the markets in the US open, and so this is overnight price action that you are seeing for today, the price of gold is at exactly the level of the 20-day cycle FLD. Now, again, if this is the 20-day cycle trough forming following this potential trough at the end of June for the 20-week cycle, then we would expect price to find support at the level of the 20-day FLD. But look at how many days have elapsed since that trough at the end of June. There have been 26 days as of today since that trough. The average length of a 20-day cycle is 17 days, and so this is potentially a little late for a 20-day cycle trough to form. And so if price does cross down below this 20-day FLD at this time, we will not immediately abandon the possibility that the 20-week cycle trough has formed, because it is quite possible that price is coming into the first 40-day cycle trough following the 20-week cycle trough. That would be expected according to the average length of these cycles after 34 days, in other words, in the last day or two of July. If gold does find support at the level of this 20-day cycle FLD, we will confirm our 20-week cycle trough as having formed, and we will probably position a 20-day cycle trough as having occurred slightly late. If, however, price crosses down below the 20-day FLD, we will not abandon the possibility that the 20-week cycle trough has formed. We will consider it possible that it is coming into the first 40-day cycle trough following that 20-day cycle trough. If price does cross down below here, we will of course generate a target based on the median crossing price, and we will watch as price moves towards that target to confirm the magnitude of the trough at the end of June. In our previous market update about Bitcoin, we were expecting price to form an 18-month cycle trough, and you can see that that 18-month cycle trough has now been found in the analysis by the software, and it occurred at the beginning of July. And so what we are seeing now is price bouncing out of an 18-month cycle trough. That is really good news for Bitcoin, because an 18-month cycle trough is a fairly high magnitude cycle trough. In our previous market update, which was recorded on this day over here on the 8th of July, I pointed out the 40-week cycle FLD. Now, usually we would look at a 40-week cycle FLD on a weekly chart, but I did point out that this 40-week cycle FLD was likely to provide support to price, and it is extraordinary to see the power of the FLD, because even though the trough in fact occurred about a week before price actually encountered the FLD, when it did reach the 40-week cycle FLD, even on this daily chart, you can see the support that this FLD has been providing to price, with price rising strongly all the way up that FLD, a clear example of the FLD providing support to price. Turning back to our 20-day cycle FLD for information about what is happening now, you can see the price crossed above the 20-day cycle FLD over here, which generated a target of $68,000, and you can see that that target was accurately reached last night on Sunday. Now that that target has been reached, the next thing that we are expecting is for price to form the 20-day cycle trough, and that 20-day cycle trough would be expected to form at support at the 20-day cycle FLD, or given the magnitude of the recent cycle trough that has formed, it could well form above the 20-day cycle FLD. Certainly we would expect the 20-day cycle FLD to provide support at the moment as the 20-day cycle trough forms. And so a bullish scenario is back in place for Bitcoin. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.